Welcome to Unlocking the Hidden Value of Your Life Insurance with Mrky and Rob Haynie from Life Insurance Settlements. This show is designed to help retirees and their advisors understand the basics of a life settlement. In this podcast, we show you how to get more from the sale of your life insurance policy versus lapse or surrender, and how using life settlements can increase assets under management. Mark and Rob ignite conversations on how to look for opportunities and navigate the life settlement process so you and your clients can enjoy a comfortable retirement. Now on to the show.
Hello and welcome to Life Settlements, Unlocking the Hidden Value of Your Life Insurance with Mrky and Rob Haynie. Guys, good to see you. Good to be with you. What do you got today?
Thanks for having us, as always.
Thanks, Bill. We're very excited to have this podcast. We've waited a long time to do it, and we're glad that we can get it going today before the end of the year. I look forward to it. Good.
Well, I understand we've got something of the golden grail in the life insurance business here.
That we do. Joining us today is Alan Buerger. And for those of you who don't know who Alan Buerger is the co-founder, along with his wife, of Coventry, and now Coventry First and Coventry Direct. In my opinion, I tend to call Alan the oracle of our business. I've watched him tell us things early on in the days when he started to speak to us as a group through our association that were going to happen. And I think he's batting, I won't say 1,000, but about 950. So in baseball terms, that's pretty good. So we're interested kind of to pick his brain and kind of get a feel of let him tell a little bit about how he got here, and then most importantly, what we're doing now and what the plans are for the future. So with that, we're going to say welcome to Mr. Buerger.
Thank you, Rob. Thank you, Mark, Bill. It's my pleasure. As you guys have heard me talk about life settlements on multiple occasions, you know it's a subject near and dear to my heart. I'm proud of what we all do and the value that we provide to consumers and to investors. So hit me with your best shot.
Well, I'll go first. So one of the things I alluded to was I make the introduction to Alan and how we kind of put an exclamation point on it in 2021. On the board, we decided we had a business long enough to create an award for leadership. And before I get into how that happened, I remember I think it was 2007, my memory serves me correctly, Mr. Buerger's picture appeared on the front page of the Wall Street Journal. And with that, I felt like our industry had arrived. And I sent him a email, and I don't exactly remember, and I didn't want to cheat, but I congratulated him on being the lead horse in a very, very long race. And here we are in 2023. And that award that he got in 2021 was renamed the Alan H. Buerger Leadership Award in 2022, and has since been handed out 2 additional times. Obviously, it's a unanimous decision. So having said that, when you want to bring somebody on to talk about life settlements, you want to bring somebody on who knows what he or she is talking about. So that's why Alan's with us today. And I think, Alan, I'm not going to kind of guide you. I want you to kind of tell us what got you into the business, where did you come from, and what did you see back in those early days that led you to where we are today?
Sure. I'll back into what brought me into the business, but by way of background, I was for 25 years a life insurance agent. And after 5 years of failing as a life insurance agent, I started to get some good ideas. And over the next 20 years, I had the good fortune to lead 7 insurance carriers 13 different times, which is to say I was the top producer in a year for 7 different carriers, 13 different occasions or years. So I became a very good, very technical life insurance agent. As you alluded to, I am in business and was in business going back to those years with my wife, Connie, and we've had a good partnership in every way. And Connie used to tell people what time it is, not how the watch works, because I was a very technical salesman. I understood how to take insurance policies apart and how to put them back together and how to design product and everything that a client really didn't give a damn about. But that was my orientation. Over the years, I gravitated from a jack of all trades, which is what most young insurance agents are. They'll take any sale of any product that they can find a prospect for, to the high net worth and ultra high net worth markets, and ended up assisting a half a dozen carriers in their earlier survivorship product designs as a consultant. I got bored with that and ended up in the corporate market. We became, I think at the time, the second largest firm selling corporate-owned life insurance, or COLI products as they're known in the country. And with a stroke of a pen in, I think, 96, Congress wiped out 70% of our renewals. And I was in the insurance business for the renewal income. So I found that more than a little depressing. And I didn't want to go back and did what I had done before, notwithstanding the fact that we had been very successful. So it was time to do something different. And after looking around for quite a while and thinking about things that we had done in years past, I had this notion of used life insurance, or what was a popular term in the car business at the time, pre-owned life insurance. And I encountered a company that was in the viatical business, which Rob, you and Mark will recall. They were a subsidiary of CNA, Viaticus. They were in the viatical business, which is to say the business of terminally ill young men, unfortunately, who had AIDS. And that was essentially that business. And fortunately, the new drugs came along, and that business turned out to be a bad business. But fortunately for the individual involved, they had a notion, and that's all it was, of what I always thought was a real opportunity, and that was seniors who had longer life expectancies. They weren't terminal, but the value was more than ascribed to the policy by the life insurance company. And there should be a market there. And so what accelerated that was one particular client of mine that had $40 million of life insurance I had sold to him. And he called me up one day and he said, "Can you come up?" And I went up to his offices and he said, "Alan, I'm dropping the life insurance." Well, for me, it could not have been more counterintuitive, because I was a life insurance agent and I got the renewals on the $40 million of life insurance. And because his health had changed and he could no longer get the insurance at the rates that he was paying. So it was a combination of my self-interest and what I thought genuinely was in his self-interest. It was a very good asset. And he explained to me in very clear terms, and this was a clothing retailer. And if anybody's encountered people in that business, they're very sharp, they're very pointed, and right up to and frequently crossing the line of abrupt. They don't waste a lot of words. And he said to me in a rather crude and perfunctory way, "I'm getting rid of the insurance. The corporation has been paying for it. I'm retiring. Now I'm going to have to pay for it, and I'm not going to pay for it." So the long story short was I said, "Look, drop 25. We'll take that cash value. We'll roll it into the 15, and that'll be paid up." And he said, "Okay, I'll do that." And it was within weeks of that conversation and then completing that I encountered Viaticus. And I said, I didn't have the capital, but I would have purchased those policies. Well, within 30 days of my first meeting with Viaticus, I had for them multiple national accounts, because I was nationally known in the insurance industry because of our success selling insurance, and really changed their business model so successfully that they terminated their relationship with us because they were convinced we were going to go in competition with them. Fortunately, they did that, and they made it come true. And that's where we arrive as a buyer of life settlements, what we came to call life settlements. Rob knows my family. Reed is now the CEO of the company. I stepped down in 2017. Connie, I had referred to a couple minutes ago. Everybody in my family claims ownership of the name Life Settlements. Reed says he came up with it first. Connie says she came up with it first. And of course, I think I came up with it first. So you're talking to me, or I'm talking to you. So for the purposes of this particular podcast, the name Life Settlements, I came up with.
Fair enough. He also came up with the term, which is stuck. It's a milder way. Sometimes life settlements is a bad word when we have conversations with folks, but the secondary marketplace was when Alan really pinned it home, and no one had a problem with that. I remember the old shopping cart ads you had in the very beginning. The market is open. It was a kinder, gentler way to kind of begin the conversation about life settlements. That's all. A lot of the advertising decisions that were made in terms of the wording, and even up to recently, the most recent television ad that's running, has really all come from your family, which is really kind of unique. Actually,
to give credit where credit's due, almost all of it came from Connie. My background's insurance, her background's advertising and marketing. We created together, because I added the insurance side. We created the language that I still laugh when I look on some of the websites of some of the players in the business, and they're using things that Connie wrote 25 years ago. The secondary market came from an economist that I encountered, and we sponsored the Wharton School of Business at the University of Pennsylvania. We asked them to write a paper about the secondary market for life insurance. And that became a seminal paper for our industry, and is still quoted and featured on many, many websites in the industry. And that goes back to 2000, maybe 2001, 2002. But there is a robust secondary market for life insurance, which is to simply say there are individuals who no longer need or no longer can afford to continue paying their life insurance. Average age is in the 70s, and we provide choice. We provide an alternative. Prior to a life settlement option, life insurance companies had a monopsony, which was a new word to me, and I think a new word to everybody in our industry. A monopsony is very simply a market condition where there's only one buyer for a product. It's essentially the opposite, but the same concept as a monopoly. And in fact, if you litigate this issue for whatever reason, the antitrust laws are what are applied when there's a monopsony. And the best way to explain it is, imagine you bought a car. You bought it from the dealer. You've had it for 6 years. Now you want to get another car, and you only had one option to sell that car, and that's back to the dealer you bought it from. You certainly would not have much negotiating leverage. You'd have to take whatever they gave you. Well, with a monopsony, that's the situation that life insurance policy owners were in prior to the life settlement market. They could only sell, and by that I mean lapse or surrender, their policy back to the issuing insurance company. Now, for those who qualify, there's a tremendous opportunity for real value. Our company has paid consumers $5.4 billion, which is 5 times approximately what they would have gotten from their insurance company. That's something that I am, and I know Mark and Rob in their roles in the industry, we're all extremely proud of the value that we provide everybody. This morning, I was on a call when we were talking about cases, And one of our financial underwriters related, just in the course of conversation, she wasn't trying to make a point. She was just relating, this is everyday business, that a woman sold her policy and used the money to help her granddaughter pay her college tuition. This happened a few hours ago. And everybody on the call said, that's just terrific. And of course, Reed, the CEO, my son, said, can you have somebody write that up so we have it in the folder? But it illustrates just one possible use of a life settlement, of what we do and the value we provide.
I guess the next question I would ask you, I'm not trying to dominate you over here, Mark, but talk a little bit about, Alan, if you can, some of the innovations you made in the settlement market, from just taking a simple opportunity to sell the life insurance policy for cash. I know you had at one time introduced what was called the swap program, and that's turned into something else over time. Kind of take us through some of the ways you've kind of re-engineered basic life settlements to expand the market, if you would.
Sure. Well, you mentioned swap, which stood for internally settlement with a paid up policy. And in its original incarnation, we had a relationship with AIG. In fact, over the years, we invested $5 to $6 billion of their money, including TARP money in 2008 when they essentially went under. So I can say we're the only firm in our industry that's been funded by the government. But we created SWAP, and what that was a lot of people don't want to give up their insurance. They want to give up their premiums. So the notion was, and what we originally did, was we would actually, through a subsidiary of AIG, at the time, American General Life Insurance Company, we would take an old policy, let's say a $3 million policy, and we would issue a $1 million policy that was paid up. And backing that up was the $3 million policy that we were going to continue paying the premiums on. And if the economics worked, and maybe it was a $10 million policy and a $2 million paid up, or whatever size. And again, it's for those people who don't want to give up their insurance, they want to give up their premiums. Now, that has morphed over the years into what we and the rest of the industry calls a retained death benefit. So we have a policy owner, a consumer. They have a $2 million policy. They can't afford the premiums. And so we give them options. We'll give them a cash payment of X. We'll give them a cash payment that's something less than X, and a paid up retained death benefit. Or the third option would be no cash up front and just a retained death benefit. And depending on the economics, because every policy is different and every life expectancy is different, that paid up benefit may extend to the maturity of the policy, or it may decrease over a number of years. It's policy specific and insured specific as to what the economics are. But the point of it is that it's providing the consumer with choice, with options that they could not get from the issuing insurance company. So probably the most popular, widely understood variation on the life settlement theme. What you'll see from us in the next year will be combining life settlements with annuities, where we'll be offering not just a lump sum payment, but a periodic payment over a number of years on a tax favorable basis. And we expect to roll that out in 2024. And there will be several different variations of that that'll provide very attractive economics to the consumer.
So in essence, again, more choice. So it's not just a cookie cutter. You have to do this, and that's the only choice you have. I think that's what's helped you separate yourself from the rest of the marketplace in terms of who is actively buying more cases than other people. And with that, I think we're going to take a break right now, end this podcast, and then we'll get to the next couple of questions, Alan, in the next podcast if you get a moment. Thank you.
No, this is great. This is a good point to stop. And again, for those of you listening, we're going to pick this conversation up in the next podcast. The new product that Alan is talking about is extremely interesting, to say the least. So I think you want to stick around for that. But for now, if you are not a subscriber to this podcast, hit the subscribe button, because this way you will be subscribed on, automatically be notified of when the next edition of this podcast comes out. You won't miss the upcoming conversation. If you like it, share it with people. Get the word out about this podcast. And if you feel so moved, we humbly ask that you rate it as well. For now, on behalf of Rob and Mark, I'm Bill Tucker, reminding you, do not wait. Live your best life today. Thank you.
Thank you for listening to Unlocking the Hidden Value of Your Life Insurance, the show that helps you unlock the hidden value of life insurance. Click the follow button to be notified when new episodes become available. Visit our website at www.lisettlements.com or give us a call at our office line at 866-326-5433, extension 1017. You can also directly contact Mark Mrky at 954-326-9378 and Rob Haynie at 954-599-4433.